Hello friends, welcome to the morning session of most important questions for your today's RBWM exam. Okay, so let's start without wasting the time. In fact, I'll be covering what will I be covering over here? I'll be covering some theory related to your topics. All the last topics, investment banking, wealth management, then one more, two, three topics or more. Okay, other financial services. So all the important topics, last ones are very important. Module D is very important. I'll be covering the theory for that and some objective questions. Okay, refresh, isn't it? Right now, before going to the exam, you'll refresh this. Okay, so let's start. Which of the following models is a standard norm in public sector banks? Now, what models are we talking of? Here we are talking of delivery models. These are called as delivery models. Okay, delivery models. So these are known as delivery models. So which of the delivery models are used in public sector banks? Horizontally organized, vertically organized, predominantly horizontally organized, and predominantly vertically organized. Now go back to what I have taught earlier. Okay, go back. So horizontally organized means what? Here the data is shared product wise. Follow the complete series. Okay, product wise. Each product is having a separate data. Housing loan will have its own data. Personal loan will have its own data, PL. These data will not be shared with each other. So this is horizontally organized. Vertically organized means there is a common database among all the loans. Means housing loan customer will have access to personal loan also, personal loan will have access to housing loan also. The same is true with CASA, current account, saving account, FD, all means basically it means all of them will have the same customer base. Here CASA, then here anything else, mutual fund, TPP, all of them will be able to access the same customer database. Because of this, what happens? The customer base, same customer you can target for multiple products. Cross-selling can be done. So now the question is different. What is the question? The question is, which of the following models is the standard form in nationalized banks, public sector banks? Now, actually the answer is different. Actually, I'll tell you the answer is nowadays even nationalized banks are going for this PV, predominantly vertical model. Means 80% of the data is common among all those. But that is the actual answer. But your book answer, here you have to answer your book. As per the book, the model followed is horizontally organized. Nationalized banks still follow horizontally organized model. Of course, in some of the nationalized banks or public sector banks, this PV has already started predominantly vertically. Means majority of the products are having a common database. But then also, what the book says, you have to write that answer. So it is horizontally organized model. Got it, everyone? How many of you got it correct? Let me see in the comment section, how many of you got it correct? Okay, yeah, many of you. Next. Among the below given, which of the following is an advantage of good branch layout? Good branch layout means why should I have a good branch layout? Now what do you mean by good branch layout? What is the meaning of this? Good branch layout means very simple. Clean, neat, okay, and easy. This is very important. Easy. Easy means what? all of them should be linked to each other. It shouldn't happen customer has to go from year to year to year to year always. So otherwise what will happen? There will be a huge rush in the bank. All the customers will be mixing with each other. So there is a huge rush in that case. So that's why it should have a logical movement. Okay. So coming back, what is the advantage? Okay, you want the advantage now. Let's look at it one by one. Everyone promotes efficiency as it will ensure smooth flow of services which results in time benefits. So promotes efficiency. Will it promote efficiency? Means, what do you mean by efficiency? You can do more work in less time. Will it promote? Think over it. Second, internal communication effectiveness increases, thereby facilitating better coordination among the staff, resulting in better customer service. So will this result in better customer service? I'll give you an example, very simple example. Suppose if I keep, whenever it's a cash deposit or withdrawal, okay? For withdrawal, let's say, for cash, suppose I keep the cashier at the doorstep only. Wherever there is a door entrance of the bank, I'll keep the cashier there only. What will happen? What will happen? See this. The cashier will be over here. You enter in the bank over here. Immediately there is a cashier. And remaining things are further. So there will be a huge line over here. Anyone who wants to go for something else also, want to deposit a check or want to meet someone, that person will have to cross this whole line. So this will create a hurdle. This is just one example I gave. There can be many examples in this. Okay. If I keep this, let's say, RTGS department, RTGS NEFT, which is done at a counter only, and many times I have seen this. RTGS NEFT is done by the person who handles a lot of customers daily. How many of you have done this? You handle the customer also, you do RTGS also, you do NEFT. Very risky, because if in the meantime you're speaking to some certain customer, your finger presses enter somewhere wrongly, there is a huge chance of mishap. Okay, so that's why understand this concept. The layout should be such that it should be easy to deal with. Easy. Everyone should feel easy. So, is this right? Internal communication, better customer service. Is this right? Provides a comfortable and congenial work. Congenial means happy. Happy. Work environment to the staff, which results in high employee motivation and acts as a morale booster. So, all of them are true, isn't it? So, the answer is all of the above. All of the above are true. Okay? Got it, everyone? Returns are more in dash and the credit risk is more in dash. Now, returns are more in dash. Here, corporate banking, retail banking. Retail banking, para banking. Credit risk is more in para banking. What is para banking? Okay, what is corporate banking? Corporate banking means giving the loans to the huge companies, around 100 crores, 200 crores, single loan. So giving loans to the huge companies, big companies. Retail banking you already know. Para banking means what? Para banking means other than banking products. What do you mean by other than banking products? Insurance, mutual fund, locker. Locker is also other than banking products. So all these, which are not the core products of the bank. So para banking. So para banking is over here. Credit risk is more in para banking. Is it more? This is outright wrong, because para banking doesn't have credit risk at all. You are not involved. Credit risk means what? Your money is lost because of the other person not paying you the EMI. In para banking, where is the question of EMI? Insurance. What is the EMI? You pay, I'll get my commission. Once I sell the insurance, you pay, you don't pay. That's up to you and that insurance company. Isn't it? Retail banking, returns are more in retail banking and credit risk is more in corporate banking. And last one, returns are more in corporate banking and credit risk is more in corporate banking. Both are corporate banking. So what is the answer? Think over it, everyone, think over it. What is the answer? Where? See here, always I'll tell you the confusing over here will be A, C and D. Even D I would say credit risk is more, returns are more. Yeah. A and C, chalo. Let's give you the hint. A and C. Between A and C, what is true? Returns are more in corporate banking and credit risk is more in retail banking, or returns are more in retail banking and credit risk is more in corporate banking. Which one is true? Think over it, everyone. Or is it the last one, corporate banking? I may be wrong. You think? Both are more. Returns are more in corporate banking and credit risk is also more in corporate banking. Which one is true over here? Yes? So the answer is this. Retail banking. Returns are always more in retail banking. Why? You'll say, sir, what are you saying? How can the returns be more? I'll give you an example. In the retail banking, what happens? The customer doesn't follow the repo and reverse repo and CRR. He doesn't follow. So even if RBI tomorrow reduces this, okay, if RBI reduces the CRR or repo, customer will not come to your branch. RBI has reduced your CRR repo. Why aren't you not decreasing the rate of interest of loans? He won't say that. But in corporate, customer will immediately come. Repo decreased. Reduce my loan rate. Immediately customer will come. So that's why customer is less knowledgeable in retail banking, or he doesn't care that much. He is knowledgeable. Nowadays everyone is knowledgeable. Okay? Everyone is knowledgeable, but he doesn't care that much, 0.25 and 0.5% for loans. So that's why retail banking, returns are more in retail banking and risk is more in corporate banking, credit risk. Why? Because huge amount of loans are given to the companies. The loans are to the tune of 1000 crore per loan, single loan, 1000 crores. Imagine if one loan becomes NPA, what will happen? And such loans, 1000 crores are disbursed around 20, 25, 30 per day. So huge risk you are taking in corporate banking. Okay? So the answer is this. Returns are more in retail banking and credit risk is more in corporate banking. Got it? Read this. After analyzing the detailed report of beginners engineering and classified furnitures, she made the following arrangements on the basis of company and their respective market stage. Beginners engineering is at maturity stage, classified nature is at a growth stage. Among the below given options, which of the following correctly represent the correctness of the above statements? Let's move on with this. This is related to a case. Among the below given, which of the following are the key challenges faced with the wealth management? Among the below given, which of the following are the key challenges faced in the wealth management? So which are the challenges? Let's look at it. Limited leveraging capabilities of the technology. Think everyone, limited leveraging capability. What is limited leveraging? Now you'll say such difficult words, but these words will come in exam. Leveraging means what? Leveraging. If I am having 100 rupees, I will give a loan of 200 rupees. means I am having less money, my capital is less, but I am investing more or I am giving loans more. That is known as leveraging. Okay. So limited leveraging capabilities of technology in wealth management. Technical architecture and technology investment. Intricate knowledge of cross-functional domain. All of the above. So which one of the following is true? Which of the following is or the key challenge? You want a key challenge, difficulties you face in wealth management. Is it limited leveraging capabilities? Means, what is limited leveraging capabilities? Means if I am having 100 rupees, I am not able to invest 500 rupees. Limited. If I am having 100 rupees, I am able to invest 100 rupees only. So that is true. That is required. In fact, if I am having 100 rupees, how should I invest 200 rupees by taking loan from somebody? That's wrong. So this is true. This is right. Technical architecture and technology investment, very important part. Nowadays, this technology is a huge game changer in any business, be it banking, be it wealth management, be it any business. Technology is required everywhere and that costs huge. The cost of technology is huge. If you want to change one software in the bank, it will cost in crores. Okay? So technical architecture means changing the overall framework of the bank. Technical architecture. So that is also difficult. So this is also one of the important challenge. If you want to go for a new technology, you have to make a lot of changes in your system. Third, intricate knowledge of cross-functional domain. Cross-functional. What do you mean by cross-functional? I must know, if I am the wealth manager, I must have the knowledge of number one, bank. I must have the knowledge of banking. Second, I must have the knowledge of stock markets. Stock markets, right? Then I must have the knowledge of, third one, real estate. Real estate, right? Real estate means your property. I must have a knowledge of legal. What are the legal implications? Because in wealth management, you have a topic called as will writing. Okay? Various legal documentations are used in wealth management. Plus, there are many. It goes on increasing. You should have a knowledge of all the sectors. Because what are you doing in wealth management? What are you doing? You are taking the money of someone and investing. So whenever you are having someone else's money, a lot of responsibility comes on your shoulders. So that's why you must have all the cross-functional knowledge. So all of these. Okay? Answer is all of these. The new private banks generally follow the dash, which means common customer information is available. Just now 2-3 questions back we did this. Nationalized banks follow what? Nationalized banks follow horizontal. This is followed by nationalized banks or public sector banks. PSB will call it as per your book. Okay, PSB. So what do private sector banks follow? They follow this. Private sector, they follow this model, vertically organized. I gave you this example, same database for all the products, same customer database. So what happens? This can contact this can contact this can contact this. So same customer can be contacted for various products, and we do a lot of cross-selling, very important word, cross-selling. Okay, very important word, cross-selling. Okay, cross-selling is a key for any banking now, and you'll get a lot of questions on cross-selling. Cross-selling and upselling, this is also one term. Upselling, these are the two terms always used. Cross-selling and upselling. Upselling means what? See, there is a difference between cross-selling and upselling. Cross-selling means selling the customers with the same level of product. Same level means if some customer is having, let's say, 10,000 rupees savings account, MAB. Then I'll sell insurance to that product, mutual fund to that customer. But upselling means what? If some customer is having Jan Dhan account, if some customer is having Jan Dhan account, Jan Dhan, then what will I do in upselling? I'll convert this customer to MAB account. MAB means minimum average balance. In Jan Dhan, that customer doesn't have to maintain any MAB. So I'll convert that customer to MAB account so that it is profitable for me. Right? So the new private sector banks follow which model? This is by PSBs, this is by private sector banks. So this is the answer. New private sector banks will always follow this model, vertically organized model, where the customer database is common for all the products. Next, read this. The most common business approach for retail banking adopted by banks are segmented approach, geographical approach, classification based approach. Think, everyone, give me the answer. This is there in your book. This question, generally this question comes in the exam. Generally. You'll get a question on the segmented, geography based or classification. You'll generally get this question. So what do you mean by this? See, this segmented means what? Segmented means over here, based on the customer base. Customer base means what? I'll call this branch as rural branch, rural. I'll call this branch as NRI branch, NRI. I'll call this branch as business branch because there are a lot of business customers over here. So what am I doing? Segmentation. In segmentation, what am I doing? As per the customer base, I am changing the name of that branch and the way of looking at that branch. I'll definitely know that if it's a business branch, I'll have a lot of current account, lot of CC term loan, right? If it's a rural branch, I'll have a lot of KCC accounts. I'll have a lot of tractor loans. If it's an NRI account, I'll have a lot of Forex, dollars, FCNR accounts, NRE accounts, NRO accounts, right? That is segmented. What is the second one? Geography. Geography means what? Geography. This is simple. Geography. Geography means as per the state, as per the location. This is a city branch, this is a Tamil Nadu branch, this is Maharashtra branch, this is Kashmir branch, all this. Based on geography, simple. And last one is classification. Classification means what? This is generally followed in the nationalized banks. In classification based approach, it is generally followed in the nationalized banks. Means what is this? This is scale 1 branch. Scale 1, scale 2, 3, 4, whatever it goes on. That is known as classification based. So now who follows what? Who follows what? Private banks and foreign banks generally follow this. Private and foreign. Private and foreign. They generally follow this approach. Segmented. Okay? Private and foreign, they follow this segmented. Geography based is followed by all the banks at the head office level generally. What are your Tamil Nadu branches doing? What are your Maharashtra branches doing? So regional offices. Classification is generally followed in PSBs, public sector banks, PSB. Okay. So which are the approaches followed by the banks? Okay. By the bank. So what is the true answer then? Here, is it said that public sector or private sector or it said banks? So which are the approaches followed by the banks? It is A to C all. Okay. So it is A to C all. Got it everyone? In which of the following business approach for retail banking, the branches are classified based on the business potential for the focused marketing strategy, These branches are positioned as resource center and form a part of overall segmentation plan. Name itself gives you, question itself gives you the hint. Question itself is giving you the hint. What is the answer? Business potential. Just now I told you. Business potential, and look at the options also. Segmented approach, geography based and classification based. Look at these approaches. So, segmented, geography based, classification based. Segmentation. Question itself, I told you the question is giving you the hint. Business potential. Just now I told you NRI Bank, KCC. What does wealth management include? Look at this. Wealth management is a financial service that helps people manage their wealth. Manage their wealth. Here, manage. Understand the difference between wealth management and investment management. Investment gives you about how to invest so that the investment grows. Here, manage your wealth. First, manage the principal. Because here you are ultra HNI. In investment management, you are not ultra HNI. You are a struggler. You can be HNI, but you are still not ultra HNI. Ultra HNI means 200 lakh crores. This much amount somebody has. That is ultra HNI. Those guys have this wealth management. Also, see here, now we have brought into our branch level also. You can't have a 2 lakh crore customer in your branch, right? Here you will have to manage with the smaller ones. So same logics are applied to the smaller guys also over here. But ultimately it is for that. So wealth management is managing the wealth. Manage the wealth. Manage the wealth means keep your money stable. Manage whatever you have, preserve it. Because if you are having 2 lakh crores, you will first try to preserve that, isn't it? So manage the wealth. It involves variety of services including financial planning, investment management and estate planning. See this financial planning, investment management. See this. What did I say? Investment is a part of your wealth management. Wealth management is a bigger topic. This is wealth. And these are all smaller guys. Okay? Financial planning, investment management, estate planning, all these are smaller. Within that, this is the big daddy. Okay? What does it include? What does wealth management include? Let's see. So, wealth management includes number one, risk management. Okay, it includes risk management. Hold on. So, it includes risk management, number one. Second, it includes tax planning. This is tax planning. Okay? Tax planning. Okay? This is risk management. Risk. You have to follow the risk. Risk means what? You shouldn't put your money in the risky asset. Not at least so that your capital is in problem. You shouldn't do that. Your capital should not be in problem. Your principal should not be in problem. ब्याज नहीं मिला तो चलेगा. मुद्दल नहीं जानी चाहिए. Simple rule. Right? This is followed over here. Tax planning. This tax. How to not only save the tax here. When you are having such a huge amount, you can save the tax. You can minimize the tax. Okay? Minimize the tax using various things. Tax can be minimized using charitable funds also. It might be given somewhere over here. Charitable. ATG. Okay? Donation to political parties completely tax free. You can donate to one of them. Completely tax free. Isn't it? But for that you need to be ultra HNI. Don't donate it from your salary. Okay? So, tax planning. Second is retirement. Retirement. When you retire, who will take care of you? Okay? Retirement. But you'll say, sir, if I'm having so much huge money, 2 lakh crores and above, why do I need to retire? I'll retire day one. Today only I'll retire. Isn't it? If I'm having that much money, why do I need to work? So basically wealth management over here we come to the branch level. We are not here right now talking of the 2 lakh crore person. Because he won't be having the worry of retirement, isn't it? He is having enough money. Right? So retirement, here we come to your branch level. How will you tackle your customers? None of your customers will be having 2 lakh crores in the branch. Right? So you'll have to tackle your normal customers. The next is what? After retirement, it is education. Education planning. Now here again we are coming to the normal customers of ours. We are not talking of ultra HNI because that person won't be having any problem with education. Which university you want? Oxford? Which university you want? Harvard? Which university you want? IIT? Take this. Huge money, isn't it? It's up to you and me, our normal clients in the branch. Sir, loan, education loan. Sir, this loan. Sir, car leniye, car loan. This ultra HNI will give the loan to the bank, isn't it? That's it. So here we are talking of normal customers in the branch. Okay. Then estate planning. Estate means whatever property you have. Property, estate, property. Okay. Property planning. Will writing. Will writing is a part of your estate planning. After you, what happens? If you are having a property of huge 10 lakh crores, many persons are having it. You will say, sir, such big figures don't exist. This is very small figure. Many persons are having the properties worth, you can't even imagine the number. Okay. So, property. Then business planning. Whatever businesses you are in. Business. Okay. Business planning. Then investment. Investment part we are taking care of later in the next chapter. You are having a next chapter of investment management only. Investment. So as I told you, these are all smaller guys, chutku. Main is wealth. Okay. Financial planning, financial, all these are different words from your JAIIB exam angle. Investment planning, management, financial planning, after all these are correlated. When I am doing investment, won't I do financial planning? When I am doing financial planning, won't I do investment management? I'll do both. These are interrelated. Okay. As I said, banking is easy. Books make it difficult. They give so many words. Here, if you think, I'll tell you, risk management, this part, financial planning, investment management, business planning, retirement planning, tax planning, all these can be correlated. If I am doing one, if I am doing any of these, others will automatically follow. Education or banking is easy. Books make it difficult. So many pages, isn't it? So, don't follow the concepts always in your bank or in your studies also. Concept is everything. Basic and concepts only everything stands. Okay? That is the pillar on which your studies, your life stands. Okay? So, everyone should focus on the concept. And what is the summary of this? Summary, SAR. Jeevan ka SAR, Gita SAR. Right? Similarly, JAIIB SAR, RBWM SAR, क्या है? Okay? Gita SAR, Jeevan SAR, JAIIB SAR, RBWM SAR. Join at that 24/7 paid classes. You will get all the SAR. Okay? I'll show you at the end. There's a huge Mahapack coming up. Increment Mahapack. Huge thing, I'll tell you at the end. Wait till the end. Yeah. Next. What does wealth management include? What does it include? Financial planning. Helps clients set goals, create budgets and save money. So every client who is going for wealth management has huge money. So set goals. How will my wealth grow? Suppose if it is 1 lakh crore today, how will it grow to 130, 150? Okay. Create budgets. Budget for investing. What should I invest? In which business? Here, I won't be investing, whenever I am doing wealth management, I won't be investing only in mutual funds and insurances. I'll invest in big businesses. isn't it? So create budgets and save money. How to save money? That is also important. Saving is important. See, for a normal guys, saving is the most important thing in a life, isn't it? Investment management, what does it include? See, earlier was financial planning. I told you these are interrelated. Investment management helps clients create and manage investment portfolios that suit that risk tolerance, goals and time horizon. Risk tolerance, goals and time horizon. Okay? Risk tolerance means what is the risk level you are ready to take. Generally, when we talk of the normal clients who come to our branch, they are risk averse. Risk averse. Whoever comes to you for FD is risk averse. Averse means he doesn't want the risk. He or she doesn't want the risk. But when you ask for returns, how much returns? No, your FD returns are very less, यार 7%. क्या होता है 7% में? महंगाई कितना है? इतना महंगाई में 7% क्या होगा? What will I get in this 7%? You don't want to take the risk and you want higher returns. Not possible. Explain the client that if you want higher returns, आपको महंगाई को बीट करना है ना, invest in mutual funds. म्यूचुअल फंड्स नहीं, नो म्यूचुअल फंड, पैसा डूब जाता है. शेयर मार्केट, if the share market goes down, everything goes down. Then why do you expect 15% returns then? Expect 7% returns, FD, happy. Isn't it? So the point over here is time horizon and risk tolerance. Very important part, risk tolerance. Basic rule of any investment, anything is high risk, high returns. Basic rule, high risk, high returns. Isn't it? So risk tolerance, goals. What are the goals? Here, if you are above the age of, let's say, 60, then what happens? In that phase, it's okay. Human being will say that no. I don't want any 15% returns. 7% is okay. I have generated huge wealth. Now that is enough for me to live. Then it's okay. But if you are in the age of, let's say, 25, 30, you just young, started a job, and you are saying 7%, okay? No, nothing. Then you'll, there's a statement from Bill Gates. It's not your fault if you are born poor, but it's your fault if you die poor. Okay? Same logic applies. Take some risk, calculated risk. Calculated risk. Very important. Calculated risk is an important word. Okay? So risk tolerance, goals, time horizon. Estate planning helps clients to prepare for distribution of their assets after death. Assets after death. Okay? So it relates to will writing. Will writing is an important part of your wealth management. Important part. What are the elements of will? What should it include? How many witnesses? Should it be legalized? Should it be stamped? All these are included in your studies. Okay? Tax planning helps the clients minimize their tax liabilities through tax efficient investments and deductions. Tax efficient investments. Here, minimize their tax liabilities. Minimize their tax liabilities. There is always a fight going on between the government and the investors, right? Why? Always government wants higher taxes because they want money, and investor wants to give lesser taxes. He wants his money. Everyone wants money, right? Government also wants money, so it tries to get maximum tax from you. You also want money, so you try to give minimum tax to the government. It's a fight, and then there is a balance. The balance between them is known as the golden rule, right? So helps clients prepare the distribution of their assets after death. That is done. Tax planning, minimize the tax liabilities through tax efficient investments. Means what? How can you minimize the tax? Donations, ATG. Many rich persons you see donated this much money there, this much money there to this. Why? ATG. 50% deduction in whatever you donate. Okay, 50% tax deduction. Then Second, as I told you, political parties. If you donate to political parties, all your money is tax free. That's why these big guys always donate to these political parties. Risk management helps the clients protect their assets from unforeseen risks, which are not seen up till now. COVID. Did anyone see COVID? In 2019, if I would have asked you that COVID will be there, do you think the world will stop for 2 years? If I would have asked you at that time, you would say, hey, pagal. Nothing happens like this. Will the world stop at any time? Will the world stop at any time? But it stopped. 2 years the world stopped. 2 years. So that's why things can happen, anything. Unforeseen, which you have never seen at all. That thing can come in life. So if you have wealth, if you have properly managed wealth, if you have kept the wealth in a proper, you don't spend it like lavishly. See, the life is between needs and wants everywhere. If you follow your needs, kindly note this, it's a golden statement again. If you follow the needs, your wealth will be preserved. If you follow the wants, you'll always be short of wealth. Your wealth will vanish in no time. I want a mobile phone, need. I want iPhone Pro, want. I want a car, need. I want Mercedes Benz. Okay? So need and want. Everything is need and want. Same thing about wealth. If you want to sustain your wealth, sustain means keep for your next generation, want to give it to others, consume yourself also, not only next generation, you can consume yourself also in a proper way. Then follow the needs, not the wants. Okay? Who uses wealth management services? They are often used by affluent individuals, affluent and families who have large amount of investable assets. 200 lakh crores. Large amount of investable assets. Large money, huge money. I don't know what is to be done with that money. Sir, but it never happens. Kindly note, you all, means we generally think that rich persons, my God, Ambani, this Adani, all these Bill Gates, they are having so much money. What will they do with that money? Why do they work? They should stop working because they have that much money. These guys don't work for money. Kindly note. These guys don't work for money. Okay? They work for the society. Because they have themselves, they have that much money so that their next 4 generations, 7 generations can sit aram se and eat. Right? They have that much money. These are HNIs, ultra HNIs. Okay? These ultra HNIs, these are the families who are having large amount of investable assets. We have brought this segment to branch level also. Here, you will say, sir, all these ultra HNIs, they will not come to my branch. Why am I studying this? First reason is it's there in your JAIIB. That's why you are studying this. Very clear? Over and out. And second reason is you apply the same logic in your branch also. It's not only, you should always focus on these Ambanis and Adanis. You can focus on your normal branch customer who has come to you. You can try to grow his wealth through your logic. Tell them the importance of studies. Tell them the importance of patience. Okay? This you have to tell them, and accordingly their wealth will also increase. Of course, not 1 lakh crore. They'll have 1 lakh, it will increase to let's say 2 lakh in some years. Isn't it? So who uses wealth management? Generally investable, who are having large amount of investable assets. Now your turn. Now it's your turn. I have spoken a lot. Now you speak. Think. Give me the answer. Dash has a direct impact on wealth creation. Select the most appropriate one. Inflation, interest rate, TDS and deposit rate. So who has a direct impact on wealth creation? Very important one. Most appropriate. Here, you'll say, sir, everything has an impact. Everything. Inflation also has, interest rate also has, TDS also has, deposit rate also has. So, who has the most impact? Most impact is always by think yourself, dear. You need to think. Most appropriate one. Most appropriate one. I'll explain you. Not to worry. I'll explain you. See, the answer is this. Inflation rate. It will have the most impact on your wealth creation. Always note who is the biggest enemy of your wealth, of your money. Who is the biggest enemy? There is no one else other than inflation. Inflation eats up your money. I'll give you a simple logic. If you are earning 7% in your FD, 7% in your FD, and if your inflation is 6.5%, then you are earning only 0.5%. Because 7% is coming in and 6.5% is going out in inflation for that year. So you are earning only 0.5. If you are earning 7% in FD and your inflation is 9%, you are losing money, you are not earning anything. Okay? Inflation will always have a direct impact on the interest rate. If inflation increases, immediately RBI comes in picture. RBI comes in action over here. It will increase the interest rates, increase, so that the loan in the market becomes slow. There is less loan in the market. See here, why does inflation increase? Because there is huge money available in the market. Because of that, inflation increases. Huge money. Okay? So, if there is ample surplus money available, supply of money is huge, then inflation increases. To see, supply of money. Who will supply the money? Supply of money. Who will supply the money? The money will be supplied by the banks. Bank always give the loans. Money is supplied through the banks only, through loans. Bank gives the loans to all the big companies. They distribute it among you and me as salaries. So here there is huge supply of money. So inflation increases. Everyone gets higher salaries. Because of this, what happens? Then RBI comes into action. It increases the interest rates. This is the disease. This is the disease. Okay? And this is the medicine. These are all the medicines. Medicine. RBI will do this now. Okay, it will increase the interest rates. TDS has nothing to do. TDS, the rate is almost everything. Whatever you do, you'll get it. You'll have to pay TDS. So remove this at all. Third is deposit rates. Once RBI increases the interest rates, deposit rates will go up. Okay, fourth one, which is not mentioned over here, or fifth one, you can call it, loan rates. Loan rates will go up. Loan rates will go up. So this will tame the inflation. Tame means what? It will reduce the inflation. Okay? It will reduce the inflation. So inflation is the biggest enemy of your wealth. Okay, got it? In a balance sheet of Mr. Towry, who is doing a corresponding management degree in financial and wealth management, he has made a deduction of 45,000 under section 80E. Mr. Vivek, who is the manager of the nationalized bank, willing to know that he has made the deduction for which cause. Can you help Mr. Vivek that Mr. Towry has made the deduction for which of the following purpose? 80E. See here, such a big question, this case study, such case study comes to you in exam. You have to always focus on the crux, SAR, Gita SAR, RBWM SAR. Focus on this. You want 80E. What is 80E for? You have to find that much. That's it. So tell me now, 80E is for what? Education loan, pension, exemption from capital gains on sale of asset other than housing property, exemption on sale of house property for reinvesting in specific bonds. Now you tell me, ATE is for what? Think. Yeah? Got it? ATE is for what? ATE is for education. Okay? It is for education loan. ATE is for education loan. Got it? ATE is for education loan. Clear? ATE, kindly note there are various sections and these sections come to you in your wealth management subject. Okay? So, here you will get it for education loan. Next. Among the below given, which of the following are not the components of wealth management? Not the component. Focus on the important word always in the question. Do they want positive answer or negative answer? Not the components of wealth management. A consultative process, customized choices and solutions, delivery in close consultation with your clients. All of the above are the components. Which one is not? Think. Thinky, yes. Which one is not? Consultative. You have to be consultative with the client. You should always be in discussion with the client so that you get the client's ideas, views, his risk appetite, his duration. You get it. Consultation. True. I want false. Customized choices. As per your client's needs, you need to give the products. Somebody wants to higher returns, give him higher returns, equities or mutual funds. Somebody wants lower returns, give him FDs, debt funds. Okay? Somebody wants loans, give him loans. Not only investment, wealth management relates to everything. Somebody wants loans, give him loans, isn't it? Delivery and close consultation with your clients. Close consultation. Again this, consultative. In fact, this is the answer, isn't it? All of the above are true. True means all are related to your wealth management. So, there is no component which is not. Everyone is a component. Okay? Which of the following statements are correct? The goal of wealth management is to sustain and grow wealth in the long term, long or short? Long term. Always focus on the long term. Never focus on the short term. There is no short term, there is no shortcut in life. Everything is long term, patience, perseverance, Shraddha or Saburi. Okay? HNWI stands for high net worth individuals. Which of them are correct? You want here, always focus on the main question in the main line. You want correct or not correct? Earlier question it was not correct. Now it is correct. So, in that case, what do you do? Which one is true over here? Think. Which one is true? Both are correct. Statement 1 is correct, 2 is correct, none of them is correct. What is true? Both are correct. Right? HNW stands for high net worth individuals. Goal of wealth management is to build a wealth in long term, longer term, never in the short term. Okay? Among the below given statements, which one is incorrect? Now look at this. Again, I told you, focus on the main line, main word in the first line. They want correct or incorrect, true or false. You have to always check. So incorrect in context of the wealth management, incorrect. An industrialized wealth management process involves only counseling to the clients to better manage their financial circumstances. Only counseling. Remember, only counseling. manage the financial circumstances, and or do more effectively develop the opportunities in the financial lives. So only counseling. Focus on the main words in this. Only counseling. Does it involve only counseling? You'll just tell, now you do this. I don't know anything else. Now it's up to you. Can you do such thing? Next, wealth management advisors offer their client solutions designed to fit their full range of each client's needs. Fit their full range. Full range. Whatever they want, whatever the client wants, what is the risk appetite, what is the duration, whatever the client requirement of the client, tailor make it. True. This can be true. Wealth management provides the services by working closely with the clients on an ongoing basis to identify their most specific needs and how these needs change over time. Design solutions around those needs. Now, most appropriate. See, this is also true. And this can also be true. Right? Clients on an ongoing basis, continuous basis. Remember this, continuous. Identify the specific needs. Each client has different needs. How these clients change over time. Needs change over time. All these three things are important. Needs go on changing with the life stage. The person at a 25 age will have different needs than the 60 age. Okay? Then, true wealth managers continue to help their clients make smarter decisions regarding their money over a period of time. So, continue to help their clients make smarter decisions. Okay? Make smarter decisions. How to make smarter decisions? They'll help it. So, all these things seem to be true. Which one is false then? False is only this one. This is false. And this is what you want. What is your question? Incorrect. Incorrect. So, you want incorrect form. Any appraisal, any loan appraisal, anything, you start a relationship with any customer, it will definitely start with the application form, because up to the time the customer is the person is not your customer, it's very difficult to give the services. Okay, so you need to start it with the application form. Next, even in your saving current, what do we do first? First, application form, isn't it? Anything in banking. The person needs to become the customer of the bank. Only then can you give any service, anything. Okay? An application form is designed to collect all the relevant information that the lender needs. Break the sentence one by one. Okay? In sub parts, we will be breaking it. So, the first part, what it says is, this application form is designed to collect relevant information. What are the relevant information you need? Okay, relevant means what? What do you mean by this word relevant information? It means that, see, what is the person doing? Is he in the job? Is he doing the business? How many family members are there? Is he having his own house? Is he purchasing this house for staying, or is it only for investment purpose? Anything, all this. Whether that person is having the car. What all the relevant information you need, you will be having it in this form only. In your savings account also nowadays, saving current account opening form, you see all the relevant information are asked from the customer. Isn't it? We ask everything. Family members, their date of birth, so that you can send this SMS. Tuk. Nowadays we have automatic systems. We send this SMS, happy birthday, right? Marriage anniversary, happy marriage anniversary, all these things, so many details are taken from that customer nowadays. So next, relevant information that a lender needs to decide whether prima facie the loan exposure would be acceptable risk and falls within the policy parameters of the bank. So see, this important part over here is policy parameters. What do you mean by this policy parameters? Here, whichever loan you give, you have a loan policy in the bank. Kindly check in your bank also and remember it for your JAIIB exam also. We always have a loan policy in the bank, which is designed means signed by board of directors. So this policy, your any loan, whatever you give, Let it be home loan, let it be CC, let it be term loan, any loan, business or consumer loan. This loan is given as per the loan policy of the bank. Policy. That's why this policy word is very important. You can't at all go beyond the policy in your bank. Can never go. If you go beyond the policy, you are caught somewhere. Okay? So, policy parameters of the bank, this is the first step preceding other processes, right? Because basically you must know if any loan is not now what do you mean by this word policy? I'll give you a simple example. Many of the banks don't give loans to certain negative areas. There are certain negative areas in the loan, in the banks, in the city. And there are certain negative businesses also. We don't give the loans. So if I give a loan to some, let's say, drug dealer, the policy parameter, it will be against the law also and against the policy of the bank also, isn't it? Housing loans are generally sanctioned against the security of immovable properties, land and building. What do you mean by housing loans are sanctioned against the security of immovable property, land and building? So what do you mean by this? See here, there are two types of this collateral. Collateral means securities. One is prime, second is collateral. Prime security means whenever you sanction a home loan, you take that home which you are sanctioning as a prime security. Prime security means that security which is built from the loan of the bank. Understand this, loan of the bank. If I give you a loan for housing and you build a house or you purchase a flat from that money, that is called as prime security. What is collateral then? So kindly understand this, prime and collateral securities. Prime and collateral. Prime and collateral securities. Okay. So whenever the security already exists and I take it as an additional security, in that case that is called as collateral. If I take additional, means I am giving you a loan, let's say CC, cash credit. What do? In CC we give the loan against stock and debtors, right? Stock and debtors, inventory and debtors. But sometimes we take the collateral also, his house or his shop, anything we take it as a collateral. So this collateral is means this property already exists. We are taking it as an additional security. If the stock or inventory fails, if the cost we can't recover from that stock and inventory and debtors, in that case you will be having the fallback on this collateral property. So the point over here was, we take immovable property, generally we take the prime security only. Collaterals are not needed in housing loans. General cases. One-off cases it can be, means if it's a typical situation. So it's case to case basis. Okay. Banks need to gather full particulars of, means whenever we do a loan appraisal, we need to gather the particulars of what? Firstly, the land and the building, means the property for which you are giving the loan. Suppose if I am giving the home loan, then I must know that this home is built where? What is the cost of the property in that area? Is the customer fooling me? It can happen, no? That a customer and a builder, it's after all the home loan is given between the developer, the bank and the customer, isn't it? The developer is the one who develops the house, that flat system. So are they both trying to fool you, bluff you, fake you, anything, isn't it? So we have to gather the information, okay, of land and building, right? What the customer is, means what this land is, what this property is, right? Existing income and the source of it. So source of income for that customer, that is also very important. Source of income. whether this customer will be able to repay a loan. That's very important part. Repay. If the customer is not able to repay a loan, it will automatically become NPA. For that we have the ratio called as DSCR, source of income. For that we have this DSCR ratio. Okay? DSCR. DSCR ratio. Debt service coverage ratio. This ratio will give you the idea whether this customer will be able to repay the loan or in the next year. There are various formula for that. DSCR means basically your net profit plus depreciation plus interest on long-term loans. Shall I write it? Here. I'll write it in the short form. Net profit plus depreciation plus interest on long-term loan. Interest on long-term, kindly note, the whole upon. Interest on long-term loan, the whole upon your EMI, total EMI. Now EMI from your bank as well as EMI from others. Okay, plus again this same interest on long-term loan. This interest on long-term loan comes twice. Once in the numerator, second in the denominator. So, this is the main ratio in any home loan. DSCR, debt service coverage ratio. Net profit, again remember it, net profit, because this question comes in exam for calculating the DSCR. Net profit plus depreciation plus interest on long-term loan upon EMI, total EMI, kindly note, your bank's EMI plus other bank's EMI. Plus interest on long-term loan. This interest on long-term loan, remember it will be twice. Now if it's somebody is a salaried person, then for salaried person, where is net profit? There is no net profit. Where is the depreciation? There is no depreciation. So simply it will be a salary then. Yearly. Yearly salary will be there. Instead of this total part, I'll have a yearly salary. Even this long-term loans, if you are not having the loan, then what? Remove it. If you are not having, then what? Then there's no question, isn't it? So, coming back. So, existing income and the source of it, whether that person will be able to repay the loan, whether that person will be able to cover our EMIs, how long this income is expected to continue. That is also important nowadays. Nowadays, the jobs are such that these jobs, nothing is stable nowadays, isn't it? Earlier in 2000, before 2000, the time was that people once in the job up to 58 years, 60 years, no problem. Then after that also pension. Now nothing, isn't it? Now what happens? Now everything is unstable. No permanent job concept. So that is also important. How long the income is going to continue. Now the point over here is, if you are talking of salaried person, then you can talk of the salary up to the retirement or whatever. If you are talking of the business person who's doing the business, in that case, how long it is expected to grow. So for that we'll check what is the history of that person. For how many years this person is in the same business. If some person is in the same business for many years, then it means that person will continue the same business. Chances here, after all it's chances, probability. So that is what we check it always. Next, existing liability if any and monthly financial repayment obligation on the proposed loans among the other things, means among the other things it is. So basically existing loans, how many existing loans do I have? That is checked. Okay, how many existing loans? Now what do you mean by this? Suppose if I am having a personal loan or I am having a credit card loan or any other housing loan I have taken, because nowadays 2 housing loans are common. If I have taken any other housing loan, then that EMI will be deducted from my salary or my income. So whether my income totally is okay for this complete loan system. That's why we have this DSCR. I told you that DSCR, all the EMIs are taken, all. Not only your bank's EMI, but the EMI of other banks also, other loans also. It can be from other banks also. So, coming back. So, existing liabilities and what is the repayments here? In this, what do we do? Monthly financial repayment obligation. So, here we take generally 6 months or 1 year bank statement. Generally 6 months is okay. 6 months. 6 months statement we take. Whether of the account for all the loans, all the existing loans. Whether the loans have been repaid regularly, whether there's any delay in the payment, for how many times it is. Once in the blue moon it exists. Sometimes it happens that somebody might not be able to repay due to some unseen situations. But once or twice it's okay. If it's a regular feature, then it means the customer is problematic. Reject the loan immediately. Isn't it? Got it? Next. Now the next term which comes for you in the same chapter is power of attorney. Now understand the concept of power of attorney. What is power of attorney? Power of attorney means an authority given by an instrument by one person called as a donor or principal, authorizing another person called donee or agent to act on his behalf. Now his means what? This his, you can consider it his or her, okay, because you can't be patriarchal, isn't it? So his or her, his or her. Nowadays we use these words, his or her, because even a female can give a power of attorney, isn't it? Equality, correct? So the point over here is power of attorney means what? I give you the authority. I tell you, I give it in writing that kindly let this person operate my account, okay, or let this person get a home loan on my behalf. Generally, this is done by NRIs. NRIs, you will see these cases in NRIs. Many of the NRIs give the power of attorney to their family members. Okay, so this is the meaning of this is POA. From one person, principal to agent. Principal to agent. Principal it will be. Yeah. Principal to agent. Okay. So basically it means this. Got it? So it can be, understand this meaning. Now there are two things in power of attorney. Sometimes you can give the power of POA for only operating that account, specific account. So you will be operating, I'll be giving you the POA to operate only that account, savings account, current account, or take home loan only for one purpose. That is known as specific POA. So POAs are of two types. POAs are of two types. Say this. POAs are of two types. Okay, specific and general. Specific and general. Two POAs are there. Specific means what? It is always related to one project only, one work. General means I'll give you a general POA. And this POA will be valid till infinity, up to the time I close it. See, this is general is always valid till infinity until I close it. Principal closes it, or anyone amongst us expires. Anyone amongst us expires. Up to that time it continues. Specific POA whenever I give, in specific POA it is always dated. Dated. means up to certain date only. That is known as specific POA. The stamp duty acts are applicable over there. Every state will have a different stamp duty act, because stamp duty act is a state subject. So they'll have their own acts for the stamp duties for the POA. Okay, Maharashtra is separate, Tamil Nadu is separate, every state is separate. Now, beyond this POA, there is also a document which gives you the power to operate a specific account. That is called as mandate. Okay. Now I'll come to a typical topic that's called as POA and mandate. Mandate. Understand these words, POA and mandate. Now see this, POAs are of two types. This, specific and general. But mandate is also there. Mandate means what? It's a simple written document on the plain paper, no stamp duty. So for these, there is a stamp paper, stamp duty over here. Okay, stamp. But here it is on plain paper, plain. No stamping, nothing. Okay. So understand this also, mandate. But mandate is generally for operating the savings and current accounts. You can't give the mandate for taking the home loan. POA I can give, if I am an NRI, I can give this POA to my father, mother, anyone, so that they can take a home loan on my behalf. Home loan also, they can take it on my behalf. Allowed. POA. Mandate not allowed. Okay. So understand these concepts very clearly, because in exams you will definitely get the points. Okay. Next. Agreements, letters, application forms required for appraisal process. Now, this is the core point of your lender's appraisal process. Very core. You will surely get a question on this. Be sure about this. You'll get a question on this. Be sure. Okay, on the documents. Definitely. First is home loan application, but obvious. Home loan application should be there. Okay. Without application, you can't work. Already I have discussed this point. Appraisal form. Now, appraisal form means what? This appraisal form is from your inside. Means it is given from your bank. Appraisal form means we'll cover all from this application you'll get the income and various positive, negative list, everything you'll get it. So appraisal form will have the details, we'll get the details from year to year in this appraisal form, and then we'll prepare it. We will prepare it and then check. It is an internal document. We will check whether the person is suiting or whether it fits in the criteria. Okay. Term loan agreement. Okay. Term loan agreement. Now what do you mean by this term loan agreement? Term loan agreement for home finance. Now this, without agreement, can you give a loan to any person? Any loan. Forget it, home finance. Let it be any loan. You can't give. Okay. Without agreement, you can't give anything. So that's why you need a term loan agreement. Now, one point which I need to stress over here. In any home loan, there will be two agreements. Two agreements. Which are these two agreements? Kindly check. One agreement, so don't confuse these agreements. Okay. One agreement is between, here, two agreements will be there. So kindly note this, okay? Don't get confused. Two agreements. One agreement will be between the developer and the customer. So this is one agreement. And second agreement will be between the bank and the customer. Bank and customer. Okay? So get this very clear. Don't confuse the two agreements. This agreement is a collateral, security. Security. And this agreement is a legal document. Legal. Okay? Legal document. First agreement, we get it before sanctioning the home loan. Before. And the second agreement, we do it with the customer after sanctioning, before disbursement. Okay? What is the process of home loan? Means how does this process move on? First, we have the loan application form. Then we do the appraisal. Once the appraisal is okay, we do the sanction. From sanctioning, we do the disbursement. Right? This is a basic rule. And then monitoring. So, from sanctioning to disbursement. Sanctioning to disbursement. Okay? From sanction to disbursement. Okay, I'll show you the steps again. Disbursement. Okay, we take legal documents. First is, shall I show it over here? Yeah. See this. First is application form. Application. Then second is appraisal. Appraisal. Then third is sanction. Sanction. Fourth is your disbursement. Okay, disbursement. And last one is monitoring. Monitoring is also equally important. Monitor. These are the steps in the loan application, loan process, home loan process. Application, appraisal, sanction, disburse and monitor. Sanction and disburse here, up to this step, you do all the things. Visit. What do I do in this? I first check the financial of that customer, financials. I check the history of that customer, history. Everything is done up to sanctioning. Okay? Then I do the branch visit. Visit also. Visit is done. In the office, so where do I make the visit? Where should I make the visit for any customer? I must make the visit, number one, in the at the house where the person is residing, and second one, where do I make the visit? At the income place, means where that person is earning the money. It can be an office, it can be a business, it can be a job, anything. So these two places you must definitely visit. And there is also a third place. Which is the third place? Type in the comment section. Which is the third place of visit? Where should you as a banker do the visit in loan appraisal? Okay, let me show you. First, residence. Present residence. Present residence. Right? First one. Second one, present job. Job or income, whatever it is. Here, if it's a business person, then there's no job. Right? So then there's a business. So business place. You can call it anything. Third is, where the third visit? This is very important. Which is the third visit? Third visit is at the place where the house is built. House site means home site. Home site you can call it. Home site. Very important one. Okay. These three visits by any concerned staff, whoever has been given this authority or responsibility, so that person should definitely visit these three places and check. Not only visit, check whether everything is okay or not. Only doing the visit is not worth. I have to check whether the person actually resides there at the existing place. I have to check whether the person actually is working there at the job place. I have to see that the house is being built over there. Otherwise, everything is okay and the house is not built. Then why am I giving the home loan? Isn't it? So, next, let me clean all this. Okay. So term loan agreement for home finance, then guarantee agreement, agreement letter, terms and conditions. Okay. Then equitable mortgage intent letter. Now intent letter means what? That person is ready to do the mortgage. Equitable mortgage. What is equitable mortgage? There are in fact many types of mortgages. One of them is equitable. Okay. One is English mortgage. Second is the simple mortgage. Okay. English, simple. Then you have usufructuary mortgage. Then conditional sale. Equitable mortgage. Generally in banks we do equitable mortgage. It's a big story, this mortgage. There are basically 3 types of mortgage only. In this entire world there are 3 types of mortgage. Simple mortgage, conditional sale, and third one is usufructuary. One is simple mortgage, simple. Second is conditional sale, conditional sale. Again, third is usufructuary, usufructuary. Usufructuary. These are the 3 types of mortgages. All others, you call it English mortgage, you call it equitable mortgage, you call it any mortgage. These are under these 3 only. These 3 are the basics. Some other day I will take it because it is a deep topic. Okay. Kindly understand, equitable mortgage is a part of this conditional sale. Equitable mortgage, bank always does the conditional sale mortgage. It never does usufructuary or simple mortgage. Okay, in simple mortgage, everything is done by the court. Kindly note. Okay, everything, court. English mortgage, that is simple. Conditional sale means I will take the property in my hand if you don't pay my EMIs. If you pay, then the property is yours only. Okay, that is conditional sale. Usufructuary means whenever the property which you are owning and I have given you the loan under usufructuary, then the income from that property up to the time the loan is going on will come to me. So that's why bank doesn't do the usufructuary. Do you take the rent of that house which that person has taken the home loan? Do you take the rent of that house in your account? That rent goes to that person only if that person gives it on rent. Isn't it? Second house. Got it? So, we always do this equitable mortgage. Equitable mortgage is a part of this conditional sale. In equitable mortgage, what do we do? In any bank except some cooperative banks, we do equitable mortgage. Just the documents are given and the amount is sanctioned or disbursed. That's equitable mortgage. No going to sub-registrar office, no registration, nothing. Very simple logic. But nowadays what has happened is, even if you do equitable mortgage, you have to give a notice of equitable mortgage. Notice to the registrar office for the month, complete 1 month. Complete 1 month, whatever mortgages have happened in your bank, you have to give a notice to this sub-registrar and pay the fees also. Okay? Of course, we take that in the administrative cost and ultimately that fees is paid by the customer only. Okay? So, equitable mortgage, these are the main documents which we take. Okay? Next, equitable mortgage confirmation letter of undertaking. Undertaking means where the finance is availed for purchase of a plot. Now, finance is availed for the purchase of the plot means many customers, what do? They purchase the plot and then build the house. So, in that case, you take the undertaking that person will build the house. Otherwise, what will they do? Do you know? Many of the this customers are doing it. Purchase the land, plot. In the form they will write, will purchase the land and will build a house. They never build a house. Purchase the land, plot. If the rate comes, sell it. Your loan repay. So what have you done actually? You have financed the plot purchase. So this undertaking means that customer will purchase the land as well as that customer will build the house. Letter to be addressed by the borrower to his or her employer. An undertaking letter from the borrower that the construction will be carried out only as per the plan approved. Very important. Whatever is the sanction plan, we have a sanction plan always. In any home loan, whenever you build any house or any property, you have a sanction plan. So the construction will be carried out as per the sanction plan only. Okay? Letter to be addressed by the borrower's employer to the bank. Letter when the applicant himself or herself is the drawing officer. Now, the point over here is, this is known as checkout facility. Okay? This is known as checkout facility. Okay, what is this checkout facility? Checkout facility question comes in the exam. Kindly note. Checkout. Okay, what is checkout facility? Letter to be addressed from the borrower's employer that what do they give to the bank? That they'll deduct the EMI and give you the deduct the EMI from the salary and give it to you. Of course, it's a difficult task. It's not possible nowadays. That's why we have PDCs, post-dated checks we take. See here, PDCs are taken when checkout facility is not possible. Checkout, kindly note this word, checkout. Checkout facility. This question comes in the exam, checkout. Definitely it's there. Okay? Then mortgage deed. Mortgage deed in case of registered mortgage. Means the registered mortgage between this builder and the customer. Okay? Mortgage confirmation letter. Confirmation that the mortgage has been done. Okay? Documents in connection with the pledge of other securities wherever applicable. Other securities means many a times what happens, the home loan is huge and the property value may not be that much, but you have to accommodate that customer. In that case, we take some collateral also and give the loan. But that is very serious condition if the customer is having good relations with you. Only in that case. Otherwise, no. We follow a LTV ratio concept. What is LTV? Loan to value. LTV. Kindly note this. LTV. Loan to value. Your home loan should always be lesser than the value of that house. Always. If my house is costing me 1 crore rupees, then loan should be less than 75 lakhs. 75 or less than 75. Okay. So that is known as LTV ratio. But in some cases, other relationships are there with the bank. So the bank has to give some higher amount of loan. In that case, we take other collaterals also, other security. Means collateral means I can take a FD also. Simple. If I take a FD of that customer, then what's the big deal, isn't it? The sanction amount is 75 lakhs and the customer is giving an FD of, let's say, 50 lakhs. I can give it as simply it's an FD-OD concept only. So I can take this lien and give you the amount. So, which are the two services? One is core banking services, core, and second is ancillary. Okay, core and ancillary. So, all the services can be divided into these two parts. What are the core banking services? Core banking services means basically this, your CASA, current account, saving account in terms of liabilities. Then FD, CASA, FD, right? These are in terms of liabilities. And in terms of assets, you provide the various loans. So I'll just write one common word, that is loans. Loans can be of various types. I can give home loan, personal loan, loan against shares, loan against property, anything, loan against anything which is legal. I can give a loan in the banking system, right? So, CASA, FD loans, core banking. What are the other ancillary services? Except these, anything what you provide is known as ancillary. Anything. Means what? What can I just say this? Even locker is ancillary service. Locker. Locker we feel it's a banking service. Actually it's an ancillary service. Why? How can you discriminate whether any service is a core banking or ancillary? How will you know? Just think, if tomorrow this locker service stops, tomorrow there is a closure on the locker service, will the bank be closed? Will the bread and butter of the bank be closed? No, right? So this is how you will understand. Suppose if tomorrow insurance services stop, will the bank be closed? No. Tomorrow if the this mutual fund sales are stopped, will it be closed? No, nothing, right? So the point over here is you have to discriminate between whether the services are core banking services or other banking services, other than banking services, or we call it other financial services. Now these include all these which I have shown just now. Okay, all these. I'll discuss 10 main which are here, 10 which are generally followed in the banking. Those 10 are, let's see. These are the 10 services which we will be discussing. Important ones. Say this. Professional banking, first is core banking, then second is professional advisory, this one, then wealth management, mutual funds, insurance, stock market, treasury debt instruments, tax and audit consulting, capital restructuring, and portfolio management. These are the 10 main services which are provided. So the session will be very interesting. I'll be discussing all these 10 and it will be helpful to you in your exams also. Because the JAIIB exams are prominently based on, you get around, I'll tell you, 5 to 6 marks on this topic. 5 to 6 roughly in your RBWM. So follow the session completely. Wait, watch till the end. Okay. In the end, I'll be showing you something more about the new increment Mahapack which has come in. I'll show you at the end. Very good. You are getting books in this, physical books. Wait till then, watch it. Okay. Next, let's move on one by one. Professional advisory. India has a strong presence of professional financial advisory services which offer individuals and businesses a wide portfolio of services including investment due diligence, mergers and acquisitions advisory, valuation, real estate consulting also. Actually, the real estate is not provided by us. Real estate consulting here, risk consulting, taxation consulting. So basically, these are the main types of professional advisory services. Advisory means what? You are just providing the advice. You are not taking the risk in this. Kindly note, in all these other financial services, we are just acting as a broker, a sort of commission agent. We are not taking any risk in this, and that's why this is preferred by many of the banks. Why? Why is it preferred? The reason is, in core banking services, you have to put the capital risk to risk weighted asset ratio, CRAR, as per the Vishal norms. It's huge, CRAR, okay? Around 11.5% of your total capital. You have to make the provisions for the loans, their haircuts, whenever you go for the core banking services. But here, very less, almost nil. Why? Because here you are not taking any risk in any of this, mutual fund, insurance, any of this. You are not taking any risk in this. You are simply acting as an agent. Okay? So here, India has a strong presence of professional financial advisory services. We have seen many professional services are available not only by banks, even NBFCs provide the same. You name it, you have it, even by NBFCs. All these stock market guys like those with Edelweiss, okay, then Sher Khan, these all provide the advisory services, all of them. Got it? So, advisory service providers which offer individuals and business a wide portfolio of services, including investment due diligence. Now, what do you mean by this investment due diligence word? Investment due diligence means whenever you want to invest in something, you can invest in stock market, you can invest in debts, bonds, you can invest in FDs. So the due diligence of that is done by the banking. Means what? What is due diligence? See, they'll give you the rating of the stocks, whether it's AAA, AA, that company's rating. Okay? So once you get this rating, you can definitely be sure that your principal is saved. Sure, why this rating is required? In anything, let it be any investment service. Why this rating is required? The rating is required so that your principal is saved. Very basic rule of business is what? Save your principal. Forget the interest. The extra amount which you will be getting, forget that. See, of course, we need higher returns. That's but obvious. But not at the cost of principal, isn't it? If I tell you put in options market, call and put options, buy futures, huge money, but the risk is also huge. So advisory services, whenever I'm advising to someone, I need to see to it that the principal, मुद्दल बचनी चाहिए, ब्याज का बाद में देखेंगे. That is the basic word used in our local businesses, right? मुद्दल बचनी चाहिए, principal must be saved. So that's why these ratings are given. So banks provide these ratings. Okay. So investment due diligence. Then we have mergers and acquisitions advisory, M&A. So all the mergers and acquisitions which happen in the corporate world. Now what happens in the corporate world? Merger and acquisition. What is the example? Which one? Take very simple example. Elon Musk purchasing Twitter. Elon Musk purchasing Twitter. Merger and acquisition. Acquisition it was. Elon Musk acquired Twitter. Okay. Then Tata buying this JLR, biggest company car maker in UK. Tata purchased it. Right. So Tata purchasing that. We Indians have purchased a lot in last 2-3 years. We are going on a M&A. Actually, we are drive. We are purchasing many companies throughout the world. Adani has purchased so many things. The Haifa port in Israel is almost purchased. Of course, it's not purchased, but it's acquired by Adani. Similarly, various ports have been acquired by Adani over here. Near our country also, Sri Lanka also we have acquired one port. So acquisition means acquiring the ports. And ports means companies. How many mergers and acquisitions? Okay, give me one example of merger and acquisition in the comment section, everyone. Give me one example of merger and acquisition in the comment section, everyone. Let me see in the comment section. Yes. M&A in the comment section. Correct. Many of you have given many examples as such. So next, M&A. Then valuation, real estate consulting. Okay, these services are also provided by the banks. Then risk consulting, taxation consulting. So these are all the additional services. Now, whom do we provide these? How do we get the clients for this? We get the clients through our banking channel only. All these customers who are in real estate, who are in taxation, they definitely have a bank account with us. Means us or anyone. So through that database, you get this other customers. That's why we must always focus on CASA. If we have our CASA right, all the other businesses will come to us. We should keep our eyes and ears open and focus on CASA. Very important one. Then we have these offerings are made by a range of providers, including individual domestic consultants to large multinational organizations. Now, depending on the organizational level, we'll be having this, isn't it? Some bank might be a smaller bank, some bank might be a bigger bank. Then they'll be providing the services accordingly, but each one provides something. Okay? Next one. Wealth management. Financial services offered within this segment include managing and investing customers wealth across various financial instruments, including, now firstly understand, before going to these various avenues, firstly understand what do you mean by this. Managing and investing customers' wealth. So this is a specialized segment in banking. We always target the HNI customers over here. All the HNIs. Now what are HNIs? These are all only 10% customers in your bank who give you 90% of the business. 10% customers giving 90% of the business. Okay. So that is basically managing and investing the customer's wealth. The target over here is there are various services in this. There can be PMS service, portfolio management service. That is also part of this only. So you can give this PMS service. Minimum investment is 50 lakhs in PMS. So managing and investing customers' wealth across various financial instruments, including debt, equity, mutual funds, insurance products, derivatives, structured products, commodities, real estate, based on clients' financial goals, risk profile and time horizons. Now, important part which you have to note is, here, debt, debt means what? Bonds, bond investment. Now, debt can be FD also. FD can also be a part of debt. It can be an investment in bonds also, debentures also, private company bonds. Then, equity, shares. Banks are ready to advise and banks are allowed to advise the customers on shares also. There is a separate division, equity division in banking. Then mutual funds, insurance, we'll be having these. Further we are having the slides. Derivatives. Derivative means what? Kindly note. The two main derivatives I'll discuss. One is options and second is futures. In options you have again call option, put option. These are the two options. When you feel that the market is going long on the upper side, you buy the call option. When you feel the market is going on the downside, you buy the put option. Okay? So that is called as long and short position. So importantly, this is derivatives. There are many, almost 8 to 10 types of derivatives which are commonly used. But I have discussed only 2-3 over here. Then structured products. What is structured products? Structured product means that product which is a combination of 2 or 3 products. Combination. What do you mean by combination? Means I will give you a simple example, sweeping account. Or let's say more simple, FDOD. What is FDOD? FDOD is a structured product. Why? Because in FDOD what do we have? We have 2 features. One is FD, second is OD. So you are combining 2 products. This is just a simple example I give. There can be many. Here, structured products are mainly related to derivatives and your debt instruments. So you can have this FD, structured products in mainly in derivatives. Okay? Structured products. Then you have commodities and real estate. Okay, commodities means gold also you advise. E-gold. Nowadays we have e-gold which we can advise to the clients. Real estate. Real estate services are there for majority of the banks. You just check your bank's realty service. Okay. Like when I was in one of the banks, it was having that bank realty.com. Okay. So realty service, realty, real estate. Based on the client's financial goals, risk profile and time horizon. These 3 are very important part. Financial goals. What does the client want? Here, everything depends on what the client wants. Because if the client wants, the goal of the client is just to reduce the risk, then you will invest in less risky instruments. If the goal of the client is to get higher returns, then you will use, instead of this less risky, you can use higher risk instruments. Then second, profile, risk profile. What is the age of that customer? What is the income? Everything depends on that. You can't give equities to a 70-year-old person, except that 70-year or this older person is Warren Buffett. Okay? Otherwise, normal 70-year person will not be interested in stock market, except he is Warren Buffett. Of course, Warren Buffett is more senior. risk profile and time horizons. What is the time horizon? Kindly note, whenever you suggest equities to anyone, kindly note the time horizon, minimum time horizon in equities is 5 years. Minimum 5 years. You can't suggest equities to anyone without in a time horizon of 1 year or 2 years max. Okay. So note this point. Whenever you suggest equities to any client, the time horizon which you should suggest is minimum 5 years. Okay. Next. Treasury debt instruments. Now this is again debt. Already I have explained bonds. Services offered in this segment include investments into government and private organization bonds. When we say government bonds, it is actually known as government bonds. When a private company issues the bonds, it's called as debentures. Okay? Private company issuing the bonds is called as debentures. The issuer of the bonds borrower offers fixed payment, interest and principal repayment to the investor at the end of the investment period. So this is common thing about the bond. It's like the FD only. Here there is only one difference between FD and a bond. Remaining all things are same. Two differences, not one. Two differences are there. Number one, bond is negotiable. FD is not negotiable. Okay, that is difference number one. Very important. And second is, there are two elements in bonds which are not there in FDs. That is market rate and market price. This is not there in FD because FD is a fixed instrument. I'll invest this much, I'll get this much. Bond being negotiable, there is a market price attached to it. And yield is attached to it, means asking rate is attached to it. So that's the only difference between FD and bonds. Otherwise, both are same. So principal repayment to the investor at the, so this coupon rate, this principal and the interest repayment, fixed payment interest. So interest is known as coupon and principal repayment is known as the face value. So in any bond or debenture, what you get is coupon and face value. Okay, as a fixed return. The types of instruments in this segment include listed bonds, non-convertible debentures, capital gain bonds, Government of India saving bonds and tax-free bonds. So these are the main instruments which we provide to the client. Okay. So importantly remember capital gain bonds. What are capital gain bonds used? Capital gain bonds are used when the customer has sold some long-term investment in, let's say, property, house, and that person now wants to save the capital gain because capital gains is huge when you sell the house. Okay, so it's generally 20% with indexation, and now government has made it 12.5% without indexation. So that amounts to huge. Suppose if you buy a property at 10 lakhs and sell it at, let's say, 30 lakhs after, let's say, 5-10 years, the difference and capital gains 12.5% on that full amount that is to be paid without indexation. So if you want to save it, you have to purchase these capital gain bonds. These are issued by SIDBI, NHAI or REC, Rural Electrification Corporation. Okay. Government of India saving bonds. So GOI saving bonds means these are actually the competitor to your FDs. Okay. Tax audit consulting. So this is also done by the banks. We do the audit tax consulting to the customers. How the customer, what amount of tax will the customer pay? What are his investments? Now see here, you don't do it in retail banking over here, but there are separate divisions in the bank. Okay. This segment includes large portfolio of financial services within the tax and auditing domain. So within the tax and auditing domain, so you can guide the customer which instruments that the customer should purchase so that his tax is saved. There are various avenues. There is a donation avenue, ATG. You can suggest that also to that client, 50%. Direct you get the deduction. This service domain can be segmented based on the individual and the business clients. So basically tax can be for individual, it can be for the company. So look at this, tax individual and tax business. These are the two categories. Tax individual determining tax liability, filing tax returns, tax saving advisory, etc. for the individual client, retail customer like you and me. And next is for the companies, business, tax business, determining tax liability, transfer pricing, analysis, structuring, GST registration, tax compliance. All these services can be provided for the businesses also, and they are provided by the banks. Because there is a huge competition nowadays in your core banking services, that's why we have gone for all these alternate sources. Okay? Capital restructuring. These services are offered primarily to the organizations and involve the restructuring of capital structure to bolster the profitability and respond to the crisis such as bankruptcy, volatile market, liquidity crunch. Means basically what are we suggesting? What do we do in NPA restructuring? Capital restructuring means actually NPA restructuring. What do we do in that? In NPA restructuring, we follow this, basically this NPA, if any client becomes NPA and that is a genuine customer, it's not a willful defaulter. The customer is a genuine defaulter. In that case, what do we suggest? We suggest the restructuring plan for that client. Okay, restructuring plan. So that is capital restructuring. Also, this is helpful in takeovers, mergers and acquisitions. Everywhere it is helpful. Okay. Portfolio management. This is the main service provided by the bank. Very important. I myself have many friends who are working in PMS. Minimum investment in PMS is 50 lakhs as per SEBI. This is the SEBI requirement. What is the portfolio? What do you mean by portfolio? Portfolio means, suppose if I am having 1 lakh rupees, with this, I am having 1 lakh rupees, 1 lakh. So do I put this 1 lakh rupees entirely in, let's say, one share, Reliance share? Do I put it entirely in the Reliance share, or should I invest it in some part in some XYZ company shares, some part in shares, some part in FD, some part in bonds? Where do I invest? Means how will I diversify this 1 lakh? Now this 1 lakh I give you just one example. PMS is for 50 lakhs minimum. Okay. So 1 lakh was just an example. So how to diversify this? This is here. It's like this. This is 1 lakh rupees and these are my 5 avenues. So I have to invest in these 5. It can be shares, it can be bonds, it can be your mutual funds, it can be your insurance. Okay, it can be a business also. You can start your own business. Now there can be 10 ways also, isn't it? Depending on it. So PMS relates to portfolio management services. Minimum investment is 50 lakhs in this, and there are various guidelines for this. We are having this topic in investment management. Separate topic is there on investment management on this. So this segment includes highly specialized and customized range of solutions that enables clients to reach their financial goals through portfolio managers who analyze and optimize investments for clients across wide range of assets like equity, debt, insurance. So basically you are providing these services again in PMS. You are helping the client to invest in various services. Then stock market. We also give stock market advisory services. We have many of the banks have their own broking services. You name it. You check your bank. Your banks are having the broking services of their own. Okay. So the stock market segment includes investment solutions for customers in Indian stock markets, NSE and BSE, across various equity linked products. So you provide it again. Equity means common equity. See this, whatever is traded in stock market is known as common equity. There are 2 types of equities. Kindly note. Okay. There are 2 types of equities. One is common equity, common. And second is preference equity, preference shares. Preference shares are not traded in stock market. Common shares are traded in stock market. So whenever you buy the shares for Reliance, Tata, any company through stock market, you are buying this common shares. Okay. There are two stock exchanges in our country. One is BSE, second is NSE, at least for stock market. Okay. Across various equity linked products, the returns for the customers are based on capital appreciation, means basically growth. If I invest 1 lakh rupees, how much returns am I expecting in a year? It should be definitely more than the FD. Otherwise, why will I invest? Right? Growth in the value of the equity solution and or dividends and payouts made by the companies to the investors. Payouts means what? Payouts means basically dividends. The dividends which companies give are known as payouts. Now payouts can be in various forms. Here, company not only gives you the dividends, it also gives you bonuses, bonus shares. It gives you stock split. Stock split is also provided. So there also the customer earns. Okay? Customer earns in many forms. These are just a few which I told you. The next is this. Mutual funds. This is a common service which you all might be selling, isn't it? Mutual fund. 3 types of mutual funds are there. One is equity, debt, and liquid. Okay. Now in this equity, say this equity. Equity means related to shares, completely related to shares. Debt means related to bonds, and liquid is related to liquid. Okay, this is related to your this simple T-bills or government bonds where the principal is saved. Now there is a combination of liquid and debt that is called as balanced fund. Okay, so this is a combination of equity and debt. These are the types of mutual funds which we sell. What is a mutual fund? Basically, mutual fund is a pool of assets. We combine together the pool of assets. Okay. So various pools are combined and we sell it. Got it? Then, insurance. Financial services offered in this segment are primarily offered in two categories. So insurance we provide generally of general insurance and life insurance. The commissions are good. That's the main part. Why do we provide insurance? Because the commissions are good. Around 28% in life insurance. 28% of the first premium. So general insurance, automotive, home, medical, fire, travel, everything is general. And life means term life, money back, unit linked, pension. These are the various life insurance products. We'll be studying more when we come to these topics. Unit link means what? It is combination of mutual fund and insurance. Here the amount is invested in share market, stock market, shares. Term life means term. Whatever you pay, you don't. Among the below given causes, which of the following doesn't come under the category of challenges faced by the retail banking? So, which of them doesn't come under the category of retail banking? Means challenges faced by retail banking: product appropriateness, inadequacy of MIS, managing the risk, and continuing growth. So which of them are not, doesn't? See, the important question is, in exam always check what are they asking. Are they asking for what is, or second is what is not? Here the question is what is not, doesn't. Okay. So which is the problem which we are facing generally, which is not the challenge? Product appropriateness, inadequacy of MIS, managing the risk, and continuing growth. Not faced, not faced. What do you think? Think over it. Okay. Let's discuss this. Okay. First part. Inadequacy of MIS. This problem we always face. Why? Because in MIS, the data required is huge. The more data you get, the more will be useful to you. For example, suppose if in the MIS I am having the customer name, address, phone number, then where does that person work? Many times the person doesn't fill the things correctly. Are you having a car? Yes. Are you having this? Yes. No. Something means casually many times customer fills this. Okay. So in this case, this always creates a problem for you. And one more point is, you can have the data for the existing customers, but what about the potential customers who are to be the customers? You don't have that. So this is true. But what do you want? You want false. You want doesn't. You want false. Okay. Managing the risk. This is always a problem. You always remember, the thief is always one step ahead of whatever you do. Always. You bring internet banking, the robber will always be one step ahead. You put various layers to it, again the robber will be one step ahead. Because this risk continuously, as you grow, the robber also grows. So managing the risk is always a difficult part. Continuing growth. So that is a main problem nowadays. Why? So much of the competition. Look at the competition. How many banks are there? Nationalized banks, private banks. Private banks also two types. Old age private banks, new age private banks. Then you have NBFCs. Then you have small finance banks. Then you have cooperative banks. Then you have this post and other payment banks. Online operators, online lenders are so many. Do you know now many of the lenders, private lenders, are giving the loans at 7%, personal loan at 7% per annum. Where are we? Isn't it? So that's why continuing growth is always a problem. This is never the problem. Why? Product appropriateness is never the problem in any banking. Why? Because when you design the banking system, you first look at what the product is, required product is. Whatever products are not used are immediately bound off in banking. So, product appropriateness is not a challenge, it's a basic element. See this, here we are talking of challenges. This is a basic element. If my product is not correct as per the needs, what's the use? For example, suppose even if right now all the banks are going for this UPI, NEFT. Suppose if I am still under DD concept, then what will happen? My product will be obsolete. Nobody would like to deal with me, isn't it? So product appropriateness is a basic one, basic requirement. It's not a challenge. Okay. Which among the following, among the given, which of the following is correct about the below given statements? Now again, you want correct. As I said, always check what is asked. Are they asking for correct or are they asking for not correct, wrong, whatever it is? So what are they asking for? Look at it. So what are the options? Look at this. Assertion means this is a statement. 2.27 lakhs per annum income will lie in the category of mass market. Per annum, if somebody is having the income of 2.27 lakhs, then that person will be under the mass market segment. The reason, person having an income level of 2 to 10 lakhs will come under the category of mass market. Now this is the statement, this is the reason. Now you have to check whether the statement is correct, whether the reason is correct, and whether if both are correct, then whether it is the right reason is right for this statement. So both A and R are correct, and R is a correct explanation of A. A is correct, R is incorrect. A is incorrect, R is correct. A and R are correct, but R is not a correct explanation of A. This is what you have to check now. Think over it, everyone. Try the answer. Yes, 2.27 lakhs. Somebody is having 2.27 lakhs as an income. So that person will lie in which segment? I have taken this some topic or similar one earlier. Kindly note. So this is right. What about R? The person having the income of 2 to 10 lakhs lies in the mass market category. Yeah, this is also true. Okay, 2 to 10 lakhs is in the mass market category. Okay, there are various categories for this customers. Okay, so mass market is from 2 to 10 lakhs, from 10 lakhs to 50 lakhs. It's a separate category. What are the other categories? Type in the comment section, everyone. What are the other categories? I have taken this earlier in one of the topics. Just 2 days back only I had taken this topic. Yeah, that is known as affluent. Okay, affluent persons. Affluent means those who are those who can create some impact. That is 10 to 15 lakhs. Then you have HNIs later. Then you have super HNIs, ultra HNIs, various categories. There are total 6 to 7 categories. Okay. So, person having the income level of 2 to 10 lakhs comes under the category of mass market. So, both are correct. And R is a correct explanation of A. That is also correct. Okay. Because this 2 to 10 lakhs is the category of mass market, that's why this person is in the mass market. Okay. Which of the following group of banks entered into retail banking activities and then moved out of this segment when they were not able to achieve the business objectives? Which category of banking firstly entered the banking space, retail banking space? Then they said no business after some years and then they left out. Which was it? Was it foreign banks? Was it public sector, private sector, new private sector? This private and new private means what? These banks came in 1991. HDFC Bank, ICICI Bank, all these. After Narsimham Committee, first committee. Okay, these were earlier ones. Karnataka Bank, ING Vaishya. These were existing from earlier. Okay. So, which banks exited? See, the question is exited, moved out. Which banks moved out of the business? Foreign banks. Okay. Foreign banks moved out of the business immediately the day they saw there is no profit. That is the worst thing about the foreign banks. They are here for profits. Okay. They have profit in their minds. So when they entered the business, there was a huge profit. I'll give an example. Standard Chartered. Stancy was a leader. Because Standard Chartered, we call it Stancy, short form. So Stancy was a leader in credit card business. Credit card, huge credit card and home loans. Home loans. It was a leader just up to 2011-12. This recent 2011-12. They were the leaders in credit card. Nobody had that much credit card business as Stancy. But what happened? The day they saw there's a huge competition coming up, they left it. Same thing, home loan. They left the home loan business. They sold it. They left it means what? They sell it. HSBC sold its business to Axis Bank. Okay. Many of the banks, Citibank sold its business to local banks. Whenever they see retail banking or the profits are not enough, they don't go for positioning. See, there is something called as positioning in banking. Positioning. Brand positioning. These guys don't go for brand positioning. They are very clear. Profit, no profit. That's it. Do you like this attitude? Profit or no profit? If it's no profit, I'll leave the business. Type in the comment section. Actually, it's not good because banking is for the customers. Even if you don't have that much profits, you must continue for some time and then you can earn later. Profits are there. We have nationalized banks, huge profits, isn't it? Among the given, which of the following product is also called as tomorrow's product with enormous scope for improvements in changed competitive scenario? Which of them is called as tomorrow's product? Tomorrow. Always remember the product levels are, there are 4 to 5 product levels. See this, it's given generic, it is not genetic, generic products, okay? I'll write it over here, generic it is called as, okay? So these are the levels of products. First is generic here. Generic product comes over here, generic. Before the generic, there is one more product inside, that's called as core product. Okay, generic, core, then comes generic. From generic comes next one, expected. After expected comes augmented. And last one is the potential product. This one, last one, potential. Okay. So let me explain you some terms in this. Core product is the basic product. Means, for example, I'll ask you one example. One simple question I'll ask you. We all buy the cooking oil, right? This cooking oil when you buy, how many of you buy the packaged cooking oil, Dhara or this what? Sunflower, this brand, that brand, you buy this? And how many of you buy the cooking oil from your local side doorstep shop? Ghani we call it, Ghani. Ghani is there throughout India. How many of you buy from there? Rarely. We always buy the packaged product. See, core product is same, oil. But we always go for this augmented. Means your this packaging, after sales, all this. This is augmented. Augmented means you add some features to it, to the core product. Let me take one more example. Any doctor nowadays gives it writing, right? If you feel sick, fever, he gives the brand names. Take this, Crocin, take this, that. Some names he gives. That is known as, that is not a generic. But how many of you buy the generic from the green shops nowadays? Green medicine shops we have, na? Generic. How many of you buy from that? Very rarely. Okay. So that is generic. Generic means it has features but no brand name. Everyone goes for brand name nowadays. Everyone likes brand names. Okay. So core product, then generic, then expected. What do people expect from it? After the expectation comes augmented product. These expectations are fulfilled. People want this, I'll give this. People want extra in savings account. Your core product is what? Savings account. Generic product is savings account. Savings. What is the expected product? Something extra. What extra do you want in savings? Fast payments, UPI came. Right? UPI, added feature. I want something additional in this. General insurance, 1 year, free on savings account. Many banks are giving. General insurance is free on many of the savings accounts for 1 year only. But that is augmented, additional. Car sales, look at the car. Why have Maruti and Tata sold so much in our country? Why? Because there is a garage available near your home. That garage person can immediately make that Maruti car or Tata car. But same thing you buy a BMW, the garage person can't even touch that car. Augmented. Immediate after sales service should be available. So what is the answer for this? The answer is this. Potential. Okay? Potential product. Got it? Next. Banks adopt different models for implementing the retail banking business, and a common strategy for this includes which of the following? So what are the models? Banks adopt different models. What are the models? For retail banking. Now, which are the models? Retail banking business. Which are the models? What are the models generally? It is SBU. Okay, SBU. Second is departmental. Departmental. And last one is integrated. Okay. So these are the models adopted by the banks. Various banks have various models. Some private sector banks, in fact, we are having the question on this. Some private sector banks follow this SBU model. Foreign banks follow SBU model. Nationalist banks follow departmental. Small banks, like this, the small finance bank, they follow integrated model. But the question over here is not this. What are the models? Question is, what are the parameters? Common strategy. Common parameters. Is it end-to-end outsourcing, predominant outsourcing, partial outsourcing, and in-house sourcing? Parameters are important. So which bank follows which parameters? Is it A, B, C, D? All of them are correct. Is it so? Or is it only part A is correct, A to C only, B, C and D only, A and D only? Which one is correct over here? Think, everyone think over it. The answer lies in this also. Just now I gave you the idea. SBU, who does what? Departmental, integrated. You'll find the same answer over here. Think. Think of it. Yeah. The parameters are A to D all. A to D all. This is the answer. A to D all. Why A to D all? How come A to D all? It's here. End-to-end outsourcing. It is followed by foreign banks. Foreign banks. So, foreign banks, this will come under this SBU, or you can follow, I'll write it separately. Foreign banks. Foreign. They will follow A. Okay. Predominant outsourcing. Predominant. This will be followed by private. Indian private banks. Private. You can call it new age private banks. New private. New private will follow B. Partial outsourcing. Old privates. They'll follow this C. And nationalized banks will follow D. They'll follow D. Okay. So these, here again the answer lies over here. See this. SBU is done by these foreign banks, new private banks, departmental nationalized banks, integrated small finance banks. So the answers are similar over here. So the answer is A to D all, and these are the banks who follow these parameters or strategies. Okay. So these banks follow these strategies. Got it? Clear? Next. In the balance sheet of Miss Yugali, there is an entry of deduction of rupees 20,450 under section 80 GG. Can you find her that the CA has made this particular entry for which of the following was? So, there is an entry in the balance sheet. You can call it balance sheet or in your own accounts. Whenever you will be filing the income tax returns, CA will make certain entries under certain sections. So the question over here is this 80GG. This 80GG is for what? That is a basic question. 80GG is for what? Interest on savings, house rent, paid, interest on home loan, and pension contributions. So what is it for? Yes, everyone. What is it for? Think over it. Here it's like this. This actually the answer is house rent paid. This is the answer. House rent paid. One second. House rent paid. Okay, so that is the answer. Now the various sections available over here are interest on savings account. So interest on savings account is under the section of 80 TTA. 80 GG is for house rent paid. 80 CCD is for pension contributions. And interest on home loan is under 80 EE. So this mainly is here in exam you will be having the section generally 80 EE. This is important section because this is related to home loan. 80 GG over here. GG. Okay. There is one more TTA. Forget it. That nobody asks you that much. Okay. These two are very important. And the answer is this. House rent paid. This is the answer. 80 GG. Okay. Next one. Among the given, which of the following suggests poor pricing or high direct expenses? This is a question in your branch profitability. Chapter number 3, module A. Which of the following suggests poor pricing or high direct expenses? Greater ROE. What is ROE? Return on equity. Return on equity. Okay. Lower ROE, again lower return on equity. Greater gross margin. Poor pricing, you want a poor pricing and lower gross margin. Now kindly understand one thing. Gross margin comes from your trading account. Net margin comes from your P&L account. Okay. So here the question is poor pricing. So this is mainly for the customers. Products you can use this. Suppose if I am a company and I am having lower margin, lower gross margin, it means what? My sales are less here. Gross margin means net sales, gross sales. So poor sales, poor pricing or higher direct expenses. So poor sales, I can see here. When my profits will reduce. If I am having lower sales, number one, lower sales or second is high cost. High cost. In both the cases, I will be having lower margin. So if I am having lower margin, what does it mean? It means that I am having poor pricing, my pricing is not appropriate, or it is high direct expenses, high cost. Okay. In both the cases, I will be getting this lower margin. Got it? The adoption of sourcing model for retail banking business by a bank depends on which of the following factors? Product range, process requirement, technology preparedness, delivery capabilities, and regulatory prescriptions. So the adoption of this sourcing model depends on what? Think over it, everyone. Yes, what is the answer? What are these? What do you mean by these? Let's see one by one. Okay, what do you mean by this? First one. Product range. What is your product range the same which is asked in the markets? People are demanding the same and you are giving the same. That is product range. Right? People are nowadays demanding UPI payment and you are giving DD. Where are we? Isn't it? Process requirement means how fast your process is. Nowadays the loan segment is where? Only 2 days, 1 day, 2 hours. We are in the hour segment now for processes. If you have still that 15-20 days loan process out, isn't it? Technology preparedness, how fast you are in the technology. What is the latest technology you are having? Are you having AI? Are you having blockchain over here? Delivery capabilities. Are you able to deliver? Means, here you mean channels, various channels. Are you with the alternate channels? Are you with physical channels? Both of them. Physical channels means branch, DSA, mobile, mobile van is there, no? That banking. Alternate means your internet banking, your app, your mobile banking, your telephone banking, all the ways of reaching the customer. Okay? And regulatory prescriptions. What does RBI say? And are you in accordance with that? Means, is your compliance good? That's the basic question. So it's after all A to E all of them. A to E all. Okay, that is the answer. Because everything depends on all these factors. None of them can be missed out. Okay? Public sector banks for the retail banking business mainly make use of end-to-end outsourcing, partial outsourcing, in-house sourcing and predominantly outsourcing. Just now we saw a similar question. Now this should be easy for you to answer. Yes? Public sector banks. In-house. Just now we saw in-house sourcing. Get it back. Money. Okay? So in-house, this is the answer for public sector. Others we have already answered. Okay? So that was it for today. Okay? Best of luck for your exam. And mind it, we are starting with the new batches for November. Today is the first organizing program for the same. Okay? Launch program we'll call it. Today evening it is there. Don't miss.